So, Brian, I have to think expectations aren't too high for anything really dramatic to happen at this meeting.
No, not at all, Alexis. Keep in mind the Federal Reserve already has interest rates near zero. They said they've been willing to do whatever it takes to support the economy, but it seems like for right now they're in a holding pattern with their 9 liquidity facilities already open. So not much new expected in that FOMC, which begins today, wraps up tomorrow with the press conference at 2:30, the statement out at 2 p.m. But there are a few things worth watching still. Obviously, as the Fed watcher, I still got to do something. So the first thing I'm watching for is that dot plot projection. This is something that we're going to get as an update. They usually only release these every other meeting. So the last time we got a projection was in June. And what this does is it's a roadmap for where policymakers see interest rates over the next few years. Because it's now the middle or beyond the middle of the year, now they'll be expanding that forecast timeline out to 2023. So if we rewind to June, 15 of the 17 FOMC members saw the interest rate staying at near zero through the end of 2022. Now with that forecast horizon expanding to 2023, how many members will see interest rates remaining at the zero bound for the next 3 years or so? Will be interesting to watch. Another thing that's also worth watching is any sort of granular detail on forward guidance. This is going to be the first meeting since the Federal Reserve made that announcement at Jackson Hole that they were tweaking their framework and prioritizing an overshoot of inflation, modest overshoot of inflation beyond its 2% target. So what does that mean for what the Federal Reserve could do with response to this specific COVID-19 related recovery? Could they say, hey, we'll keep interest rates near zero until inflation and or unemployment hit a certain target? That could be something that Chairman Jay Powell will say in his press conference again tomorrow at 2:30, which we'll have the full coverage of that right here on Yahoo Finance.
Brian, are there any surprises left on these FOMC investor days? I feel as though Jerome Powell and a lot of other Fed policy members have done a real good job this year signaling their intentions.
Well, for right now, it seems like there's probably no surprises. Keep in mind that the Federal Reserve has been pretty clear that they could use other tools if they needed to. One example being yield curve control, but they said we don't really see the need for doing that right now, which would be the process of buying treasuries or committing to buying treasuries in whatever amounts are needed to make sure that yields go below a certain point. It is definitely true that the 10-year and the 30-year yields have gone up since the last FOMC meeting on July 29, but everyone that I've spoken to has pretty much said that they haven't risen to levels that would be of concern for the Federal Reserve because they're all well below 100 basis points, for example. So no real surprises here, but it'll be interesting to see immediately after this FOMC meeting what the tone is going to be from Federal Reserve policymakers with specific respect to what fiscal policy should be doing. We've heard a number of Fed officials say we've done all we can do here on the Federal Reserve side. It's definitely the case that fiscal policymakers need to do something more. And with those phase 4 talks now stalling, how much pressure will the Fed officials be to say even more aggressively that fiscal policy needs to step up to the plate? Worth watching as the FOMC wraps up and then those Fed speakers go back out and begin making public remarks again at the end of this week.